Som Seif, the CEO of Purpose Investments, for a look at how investors should be positioning their portfolios, of course, as the Bank of Canada cuts rates, and also, of course, as the price of oil continues to decline. Som, let's talk a little bit about your strategy and also your product offering. It is an alternative investment strategy, part of it. But the main point is that you try to manage risk.
Yeah, well, I think it's one of the tenets of the markets that, when I look at, very few people are doing it. And it was just something very important to me when I was building the business was, not only deliver really great products and low price points and the fees, but also manage risk, help manage the risk of loss and the drawdowns and help compound wealth better. And you need to do that. And I mean, this is the type of environment that, investors are nervous, they're worried about their long-term wealth. And this is the type of environment that you need to be thoughtful around risk management. If you're not doing it, then you're just riding the ups and downs of the markets.
Some, a lot of people, though, say, many money managers out there who've been doing this 20, 30 years will say that they implement risk management all the time.
Yeah, risk. Most people will tell you they manage risk by just waiting or capping the amount they put in a single stock, and to us that's not true risk management. Risk management is one, having a great quality score and structure in terms of what you pick, but two is actually willing to go into cash, or three is actually shorting or hedging out market risk. So we talked about momentum earlier. Markets have momentum, and we believe that you need to manage risk using that momentum. So if market momentum is strong, you don't hedge as much. When momentum is weak, it's a really important thing to take risk off the table.
So give us an example of what you would have been doing last week.
Yeah, well, a great example, so we have one of our more very alternative products is our market neutral fund, fantastic, only market neutral fund that's available for every investor broadly, prospectus offered in Canada.
And market neutral means what?
It's neutrality to equity markets and bond markets. So what it does is it goes long equities but hedges out market risk. It goes long currencies but hedges out bad performing currencies. It goes long commodities but hedges out high contango commodities. And so the idea is it's hedging the market exposures and giving returns through ups and down markets and really independent of what the equity markets or the bond markets are doing. And last week is a really interesting market. Euro, we're short euro, for instance. Euro's done very well for us. We're short Japan and the yen. That's done very well for us. But we're also long currencies that are doing well for us. In equity markets do well, but you want to hedge out market risk. And so we do a lot of these things. Oil is another example we just talked about. We have a hedge against oil, so we actually short our oil exposure because its momentum is very deeply against us, and more importantly, it's a high contango. So the curve structure of the commodity looks really ugly. So you don't want to be long that. You want to be short that type of asset.
And Sam, I want to also just bring this up for our viewers as well, because there's lots of different products out there. You can go and you can buy the equities alone. You can buy options. We sometimes have option traders on. You can buy mutual funds. You can have your money in pooled, or you can have money in ETFs. Yeah. And your structure is an ETF, correct?
Well, it is. And in fact, I'll just correct one thing. I believe that mutual funds and ETFs are the same thing. We've got to get past this idea that it's ETFs or mutual funds. I just believe, so everything
I think there is a difference.
Well, there isn't. It's just a cost, and that's what really matters. So all of our funds are actually in ETF mutual fund form. It just offers the same price across the board.
Well, let's explain that a little bit more, because ETFs to me trade on an exchange.
That's right.
And it gives the investor the ability to say, I believe in oil, I want to go long oil, and then when they reverse that, they can actually sell it on an exchange,
right,
as opposed to necessarily calling the mutual fund company and having.
But it's the same thing. It's the same thing, Catherine. So the difference is if you're an intraday trader. So if you believe you can time the market intraday, and my argument will be not very many people can do that, and definitely at the individual investor level, very difficult to do that. I mean, the professionals have a hard time doing this all day long. So I believe that ETFs are fantastic tools. They're wonderful, democratizers of investments. But what's most important is they're also tools to allow people to invest and invest long term. And I believe investors should be long term. And what we always believe is that inside the investment product, whether it be a mutual fund or an ETF, it's got to do the management for you. It's got to be a really sound, strong vehicle that allows you to go long the market or the strategy for a long time, 5 years, 10 years.
And money managers, mutual fund managers would say that that's exactly what they do. You say what?
The difference is that it's just during market environments where there's high volatility, markets are falling, you got to protect, not just be long and ride the market up and down. You got to protect against the losses and help compound wealth. It's just simple math, so you don't have the same rides. So
that's where you think that the alternative aspect, that really giving investors the access essentially to hedging is important.
Absolutely. Okay. And if you look at a portfolio, and look, the last 30 years, being long equities and bonds has been a wonderful trade for most investors. investors, I think the next 20, 30 years is going to be an extremely difficult trade to be long bonds and potentially just a pure long equity portfolio.
Sam, last question for you before we go. What's your word of wisdom for viewers, given all this volatility and people are feeling a little bit of, certainly they're feeling pain?
I think the most important thing is you got to make a decision early on. Are you a speculator or are you an investor?
Okay.
Speculators worry about this volatility. Investors don't. Investors think about their long-term liabilities, their long-term goals, and manage through these environments by making sure the portfolio is structured right.
Sam, great to see you. Thanks so much for joining us.
Great to be here.
That was Som Seif, the CEO of Purpose Investments.